Hello and welcome. You're watching Countdown right here on Bloomberg Quint Live. Quite a turnaround of events. With the Nifty and the Sensex now perched today, this high is almost 1% higher. We've rescaled that 10,900 mark and holding on to those gains from early morning. Let's quickly run you through the headlines first. Indian markets are witnessing a bout of relief rally after other major markets sold off in Monday's trading session. The Nifty trades around the 10,950 mark with most sectoral indices trading with gains. Zee Entertainment is the top loser on the index today. The stock is now down for the 7th straight day in a row. Diwan Housing Finance submits a draft resolution plan to lenders, claims no creditor will have to take a haircut on the principal amount, also proposes borrowing from banks and NHB to restart retail lending. And Indiabulls Housing Finance is the top gainer on the index ahead of its earnings today. Neeraj, good afternoon, and a pleasant afternoon, so to speak, but we're still 1.5 hours away from close, so could be too soon to say.
Yeah, you're completely right, Devina. But you know, the fifth day on a trot, wherein we started lower and looks like we are closing above the lowest point of the day. That's the point that I'm trying to make. That all through the last 5 days, we have closed higher than the low point of the day, which is a fairly encouraging sign. In today's session, ahead of the last 1 hour or 1.5 hours of trade, we're already up about 1%. Pretty heartening. I want to see what India VIX is up to, because the last 2 days it had shot up. My guess is that it would have come off a bit. Yeah, marginal at that, but no big spikes in volatility. And by the way, there's a picture across the world as well. The PBOC move today, the midpoint rate that they've spoken about, is probably giving a bit of a relief rally to a lot of other asset classes. So Europe should come up on your screen. Dow futures should come up on your screen. The last 2 days, Europe has been taken to the cleaners. Let's just see what the European indices are doing today and what the Dow futures are doing. So as you can see, a bit of green on the screen there too. And the Dow futures as well, despite calling China currency manipulators, so on and so forth, Dow is at 124 points in the green, or the futures 124 points in the green, so not a bad sign. Quickly, the heat map. And show you what's moving and what's not within the large cap space. More green than red. Not too many people would have thought of it. That one big sulk really has to be Zee Entertainment. 7th day on a trot, the stock is down and correcting viciously today. Cipla 3.5% down. Some of the IT names have corrected as well. On the gaining side, Indiabulls Housing Finance 6%, Bharti about 4.5%, and Tech Mahindra and some of the IT names have done well. Bajaj Finance bounces back 2.5%, and autos are not having a bad day. Essentially, most things are in the green, save for Zee and to an extent Cipla. What are the broader end of the spectrum?
Well, it started off on a slightly better note than the large cap index. So while the index was up about 1/3% in the morning, the mid cap started off more than 0.5% higher, maintaining the gains through the afternoon session. Let's quickly look at what the key movers on the index look like. So the Nifty mid cap index is up almost 1.86%. So a heavy outperformance in today's session. SRF leading the pack, 13.5% higher on the back of its numbers. Diwan Housing Finance, that's up about 9%. Indiabulls, I think all the group stocks are doing well. Graphite India 6% higher. Then you've got Indian Bank, Questcorp, and Max Financial Services 5% higher. Looking at the losers, then Future Retail down about 5.5%. LIC Housing Finance is down about 2%, and then you've got Bharat Forge, Edelweiss, Castrol, which looks slightly under. From the small cap index, we quickly have that as well, which is doing okay for itself, about 1.5% higher. Jet Airways is up about 5%. You've got Vakrangi, which is up 11%. IRB Infrastructure, AG's Logistic, all up in trade. Losers include the likes of Kaveri C, Just Dial, which is looking weak by about 1%. And then you've got a First Solutions, which is looking slightly subdued in trade this afternoon. But let's take a look at what's been happening in the futures and options space. Agam Vakil joins in for that. Agam, good afternoon.
Good afternoon. Well, it's certainly turning out to be a day which offers respite to a lot of these investors, considering the indices are advancing by around 1%, and that goes for the futures space too, because we are seeing about a 5% increase in open interest towards longs as far as the Nifty futures go, and the Nifty is attempting to move back towards the mark of 11,000 for now. The Nifty Bank advancing by a little more, outperforming the benchmarks. It's up 1.4%. another 4.5% added in OI there is too. Though India Volatility Index, as one might expect, is coming off. It's down 3%, and it's still above the mark of 16, but as long as it's coming off, it also means that there is a contraction in premiums. And speaking of option premiums, let's pull up the options distribution currently, and it's the 11,000 mark, which is the pivot at this point in time, considering maximum open interest is with the 11,000 call and the 11,000 put. Moving on, in terms of change in open interest, given the fact that we've seen a little more writing, well, we are seeing, a lot more in terms of the 10,800 and 10,900 puts being written. But let's talk about stocks. Berger Paints is right at the top, and it is advancing. It is looking at 56% increase in open interest, so longs there for sure, no doubt about that. And moving on, we also have a lot of traction in SRF, another one of those counters doing very well in trade today. That's up 14%, 52% added in open interest. As among others, we have Cipla, which is under a bit of pressure, down 3.5%. 25% added towards fresh shorts, and the other stock which is not doing as well is Arvind. This one also seeing a lot of shorts, but for a change, on the whole, there are more gainers as compared to losers in today's day of trade, and that perhaps is the big takeaway. Let's wait and watch whether or not things do change substantially in the last 1 hour of trade.
Yeah, let's wait and watch. The Bank Nifty is actually galloping ahead. Agam, thanks so much for putting that into perspective. 380 points higher for the Bank Nifty, above 28,000. Well, spare a thought for people who had initiated some shorts yesterday thinking that this would continue. It's taken a very brisk U-turn. As has the world, because China set the yuan midpoint at stronger than 7 per dollar at 6.9683. This announcement came in before the Indian markets began, and therefore they had the benefit of that, which is probably one reason amongst many that the world markets are a bit stable today. Nick Parsons of the Thomas Lloyd Group joins us right now on the show. Nick, good having you. Thanks so much for joining in. Yesterday it seemed like the doomsday scenario wherein the yuan was allowed to drift sub 7, the midpoint now being fixed at 6.9683 per dollar. What do you make of this U-turn? Because if yesterday was a big policy move, then the move today seems to be a very sudden reversal. Or the other indication is that it was not a very well thought out slide that was allowed yesterday, and there's a bit of an arrest that has happened today.
Well, good morning from London. The way I would characterize it is that yesterday was the strategic move and today has been the tactical play. So the big decision has been, of course, to allow the yuan to depreciate and to go through 7. But in the face of accusations that it might be manipulating the currency, tactically, they've just put a midpoint of today's range somewhat firmer than many people whose mathematical models had suggested. So I think tactically it's very astute. I've no doubt whatsoever that the Chinese authorities are absolutely aware of what they're doing and how it would be taken. And we know, of course, that nothing happens in Chinese markets without the implicit support or permission of the authorities, and I think they've actually played this one very, very well indeed. I think if they'd moved the midpoint substantially above 7, that would have signalled an escalation at a fairly delicate time in trade negotiations, and given what's happening globally in terms of geopolitics. And I think tactically this is a very astute move. I certainly, though, don't think it's the end of currency volatility, and probably not the end of Chinese currency weakness either.
Nick, the point is, yesterday a lot of people said going sub 7 is a line crossed in the sand, which is difficult to retreat. Now my question to you is, does today's move make you believe that both sides are putting up a hard face but want a resolution, want to come out of this in a better fashion? And do you think equity markets or asset markets across the world would start factoring that in? Because India, for example, is doing really well in trade today.
Well, it's a very good question, but I stress that I think the strategic move is to put pressure on the Chinese currency. I think it will weaken somewhat. I think tactically the authorities have shown themselves to be in control, and really they showed themselves to be the key driver of the market, because the driver of the exchange rate here for the moment is not the United States. The United States is not in control of this move. The Fed isn't in control. The president isn't in control. The Chinese authorities hold all the aces over the very near term. I think in doing so, they're allowing the markets to stabilize, to get used to the new environment, and implicitly there is always the threat that they can move this a little further at a time of their choosing, should they indeed wish. So I think what we're seeing is a swing in the balance of power back towards the Chinese, and I think that is what is the important takeaway from here. The president is very, very unlikely, I think, to be ordering full-scale foreign exchange intervention. I think that would be catastrophic for asset markets globally. The Fed doesn't meet for another 6 weeks and 1 day, if my calendar is correct, so the Fed is out of the picture. So really, the near term all depends on whatever the Chinese wish it to be. And I think that shift in the balance of power is something that we should really, really take note of. So the market will go where the Chinese authorities want it to go. Of that, I have no doubt.
Yesterday's move also moved the needle in a very big way for emerging market currencies. For the Indian rupee as well, we saw the sharpest fall in about 6 years. Where does it leave, emerging market currencies now?
I think for the next few weeks, and possibly even right until the end of third quarter, I think it leaves emerging markets vulnerable to some liquidation. What we have seen over the course of the last 3 or 4 months is that investors globally have increasingly been long of emerging market currencies. So they've bought the rupee, they've bought the rupiah in Indonesia, they've bought the Philippine peso, and they've bought the Thai baht. They've bought currencies that either had strong interest rate differentials or very positive momentum behind them. And they did so largely using the euro as the funding currency. Well, a very interesting thing happened yesterday, which was amidst all the turmoil, the euro rose from 110.5 against the US dollar to 112. And we've seen an absolute scramble from investors to be closing out their short euro positions. So Euro India, Euro Indonesia, Euro peso, and Euro Thai baht were all had significant moves to the upside yesterday. And I think this position squaring has got further to go. So I would characterize this as being very much headline driven, but then quickly morphing into a position-driven squeeze, and I don't get the sense that that yet is over. And I think we could be seeing in the near term somewhat more strength from the euro as investors move to be closing out their positions. If we look at Euro India yesterday, it had the biggest one-day move to the upside for several quarters. So Euro India is now back above 80, Dollar India now back above 70, and crucially for those investors who look at more technical signals as well as factoring in the macro news, Dollar India yesterday moved up through its 200-day moving average. And if you were to take a look at a chart of Dollar India, you'll see it hasn't been there for at least 3 months and possibly 4 or 5. I'm doing this from memory. I've kind of got a picture of it in my head here. And so the move above the 200-day moving average is something that would have made investors very, very nervous. And that itself, for the model-driven, algorithmic traders, would have been a signal to head for the exit. So I think we're going to see that position squaring continue for the next few weeks. And I think until things calm down, hopefully towards the end of September, early October, then we're going to see a little bit more pressure on emerging markets. And it's the case that, you know, the selling can just be indiscriminate, because when you have to square your position, you have to square your position. It really is as simple as that. So it's not a question of looking for value, it's a question of obeying the disciplines of trading.
All right. That's for the currency market. Equity markets, Nick, and you know, we've been down 11% from our record highs here in India. On the verge of probably seeing a turnaround, but global markets not being supportive. The last few days, you know, have really washed out sentiment here across Indian equities as well. Does that change a lot in terms of what happens now and the focus now shifting mainly towards the trade turmoil rather than individual markets and earnings performances thereabout?
I think what has changed considerably over the last week is the psychology of investors. And I think the mood, which for the last 2 or 3, perhaps even 4 or 5 quarters has been to buy the dip. Buying the dip, buying every 2% move down in global markets has been the route to success in equity investing. I just feel that buy the dip mentality has probably run as long as it can. I think investors have been shocked and scared by the scale and speed of the movement that we've seen over the last 5 or 6 trading sessions. And I don't think that there's going to be the appetite to buy this particular dip. Moreover, I do feel that there's quite a lot of people who'd be happy to see a further rally from here as an opportunity to further reduce exposure, to further reduce risk, and to say, do you know what, let's just bank what we have and view this as a move to the sidelines for the course of the next few weeks, perhaps even until the start of the 4th quarter. You don't have to be invested all the time. Whatever the asset gatherers tell you, and however much people tell you it's impossible to do market timing, if market timing didn't exist, I'm afraid programs like this wouldn't exist either. I think there is very much a role for active management and for active market timing, and I think people who follow that particular script will be deciding that perhaps this is the time to take a few more chips off the table.
Okay, point well taken. Thanks a lot for that, Nick. Thanks for joining in today and giving us that perspective. Really appreciate your time. Well, that's the view from Nick Parsons talking about what's happening across the world now. Let's welcome in somebody who traverses both the global and the local perspective. One of the larger AIFs and the CEO, Vaibhav Sanghvi of Avendus, joins us right now on the show with his thoughts. Vaibhav, good having you. Thanks much for joining in. Just one quick word on this global scenario as well before we move to a couple of things and a few noises that we're now starting to hear from the government side as well. But do you reckon what's happened on the world side might disrupt India more? Because quite contrary to maybe not the MSCI EM index, but the MSCI Asia Pacific index or others, India has fallen a bit more. Is the pain in the price?
No, I think you're right in the sense that the recent global events are actually, are actually leading the markets to a risk-off mode. Having said that, we need to understand that, while we had fallen from about 12,000 Nifty to around about 10,800 or 10,900, we'd already seen that kind of correction. Of course, for different reasons and which are purely local in nature, but in terms of the price performance, we were actually underperforming the whole basket. Now, since the global markets turmoil have started, there is a possibility that in the shorter term, we might be little outperformer. I'm not saying that we would be decoupled, but we may be outperforming should the market fall, especially other emerging market from emerging market standpoint of view. So there is a possibility that our performance may be slightly better. But having said that, on absolute terms, we are still waiting for things to get rectified from the budget perspective, and thus would wait till then.
Okay. The finance minister's reiteration yesterday that they are open to listening into the FPIs and maybe the Economic Affairs Secretary will meet a body of FPIs. FPI and the stock market experts are going to come and meet the FinMin as well. All of that, does it lead to some bit of confidence? Because I've heard more than one expert suggest that one of the key sentiment changers would be when the market believes that the current dispensation is listening in to what the market wants to say. Does all that's happened in the last 24 hours and the comments coming in, do they give you that confidence, Weber?
No, of course, it's a very good positive step in the right direction. So we, as a market participant, we would love to go and express our views to what exactly it's all about. I mean, it's not only about FPI's taxation; it is also about AIF taxation as well. I mean, at the end of it, the common thread being that the trust as a vehicle is taxed. Thus, whether it is an FPI or an AIF category 3 fund, the structure remains the same. So we'd love to go and express our views, but as I said, it is very positive from what the Honorable Finance Minister has mentioned yesterday. And we look forward to seeing a very constructive and a positive solution to this.
Okay, Vaibhav, so in light of that, now my question is, you guys were sitting, I presume, on some bit of gunpowder dry before the election verdict came out. Post that and post the budget, there has been a sharp sell-off. What's your stance currently? Are you still sitting on cash? And if so, would you make use of this 1,000-point fall to deploy that cash? We are back about 11,000, by the way, as we speak, just nudging the 11,000 mark. Would you use this 1,000-point dip to deploy that? Or would you believe that there is some more downside left for the Indian markets fundamentally because of a slowing economy and a slightly worsened global trade scenario?
Yeah, of course. I mean, there are worries in the market, and precisely the reason why the market is at currently at about 11,000. We do believe that a good amount of that kind of negative news has been baked in. But if you ask me that whether there is a catalyst for market to move up immediately, then we will probably wait for the kind of announcements which the government is likely to make on the economic development side, and especially on the AIF and FPI tax as well. So if those kind of things turn out to be positive, then my sense is basically that we might see some quick recovery into the markets. Yes, and that 1,000 fall, we were pretty much light on the book, and we think that the levels currently are actually attractive on a valuation perspective. So of course we will start deploying, where we have started deploying some amount of money around these kind of levels.
What would the ideal retail strategy be right now, Vaibhav, if you have to take an approach towards investing in the market and you don't want to sit on cash right now? What should the approach be? And should there be some sectoral preferences, or you'd rather just take a look at the stocks which offer value right now, not heavily focused on an individual sector?
No, of course. See, there's always this whole big debate about growth versus value, right? But value, in absence of any catalyst, can continue to remain value for a longer period of time. Thus, India being known for being a growth market, I would purely focus on the growth set of kind of companies. If I'm looking for a longer tenure, like a 3 to 5 year horizon, then of course India as an economy and a market gives tremendous opportunities for somebody to invest in. But if you're looking for a very short term kind of trading stuff, then there are too many variables out there to actually time it appropriately and get it right, to be very honest. So on the immediate short term, things may continue to be turbulent purely because of the global side, but a longer term story of India remains intact and is very attractive.
All right, Weber, we'll leave it at that. Thank you so very much for joining us this afternoon with your thoughts. That's Vaibhav Sanghvi of Avendus joining us with his views right now. The indices trading at the high point of the day. For the Nifty, we've crossed 11,000 now, trading comfortably, and no signs of stress through the day. It's just been a clear glide up, and The banks are supporting really well today, above 28,000 for the Nifty Bank, a good 443-point lead maintained in today's session.
Yeah, well, it'll be important to get our technical experts on board and talk about that. Now, before we do that, I think there are a few stocks which are in focus, some which are doing really well, and one which is not doing all that well. Let's talk about all of those, the three important names that you should monitor today. Firstly, we'll talk about Diwan Housing Finance, then I'll also try and talk about what SRF has done today, and then throw some perspective on Z Entertainment and how that stock is doing. So let's begin with those newsmakers. Diwan Housing, well, it submitted the resolution plan with lenders, which proposes to honor at least the principal amount. The proposed plan does talk about the borrowing from banks and the National Housing Board to restart the retail lending portfolio. Vishwanath Nair is here to make sense of this announcement and tell you what would it mean for DHFL. Vishi, just explain what would this mean.
Right. So, Neeraj, as you know, the company has not been, doing the lending operation, which is key for an NBFC to continue its business. So, the additional funds that they will seek from the lenders will help in that, obviously. But also, as part of the resolution plan, they're planning to take out some of the more sustainable loans which are given to retail borrowers from their loan book, and then treat the rest of the wholesale portfolio in some form of restructuring, either splitting it and putting it into some long-term equity-like instruments, and then also taking some kind of haircut on the interest income that would have come from those loans. So while the principal repayment, they're saying that there are no haircuts. There's going to be some, there is going to be some haircut for the lenders as far as the wholesale portfolio is concerned with respect to the interest income. Secondly, there's also this is also just the first step of the entire process. Remember that under the RBI's June 7th circular, the lenders have about 180 days from the day that they have signed that ICA to actually implement the plan. So they signed the ICA somewhere in the first week of July, and since from that point onwards, they have about 6 months to actually implement a resolution plan. So now this period of time will be used in trying to negotiate with the company on better terms for the lenders, since obviously they will also be looking for a piece of their pie. And once they have convinced, and once they are convinced of what works out as a resolution plan, they will then go ahead and implement it. So while the company has been claiming that it will restart lending operations from August, we still need to see when those funds come in from the banks. There has been no decision been made as of now. Obviously, the plan was only submitted just this morning, so that negotiation and discussion period is still pending. After that, then we can see whether DHFL gets the money that it deserves.
All right, Vishy, thanks a lot for that. Meanwhile, one of DHFL's auditors, Deloitte, Haskins and Sells, has resigned. The audit firm submitted a letter with the Ministry of Corporate Affairs saying, and I quote, "Our firm's policy on client acceptance and continuation do not permit us to continue as statutory auditors of the company." Deloitte had raised significant doubts on the going concern status of the company during the fourth quarter earnings itself. All right, moving on. A stock that is doing extremely well in today's session is SRF. The stock that had corrected over 17% last month saw results that met analyst expectations. Yash Upadhyay is here to take us through the numbers and why the stock's doing so well today, Yash.
That's right, Devina. So if you take a look at the numbers, the top line was slightly below expectation, but overall on the bottom line as well as on the operational front, the company did manage to beat estimates. So take a look at their revenues. They have seen a 9% growth on a year-on-year basis to about 1,828 crore, which is slightly lower than the expectation of 1,917. But the bottom line was up 41% to 189 crores. EBITDA was up 10% to 350 crores, and margins came in at 19% versus the expectation of about 16%. The bottom line, though, was aided on account of another income of 15 crore as well as tax reversal of around 13 crores in the current quarter. Now, the main reason for driving this growth is the chemicals business. There, the company has reported a strong 26% growth on a year-on-year basis. We've seen the revenues for the chemical business come in at about 603 crore rupees for the quarter, which now accounts for almost 33% of its overall revenues as far as Q1 is concerned, up from 27% in the same quarter last year. There was a weakness for for the technical textiles business, which is down 11% on account of the slowdown that we've seen in the automobile business. Now, as far as the chemical business is concerned, the company had undertaken a shutdown at its Dahej plant after receiving a notice from the Gujarat Pollution Control Board in the month of April and May, and on account of that we have seen the management has said that there was a slower than anticipated recovery, but despite of that they managed to do a 26% growth on the top line. The margins too had come down for the chemical business on account of lower realization. Moving on to their packaging and films business, that too did fairly well. The company's revenues have grown by about 11% to 702 crore rupees. While the company has done well in that aspect, as far as the outlook is concerned, the company says that it is in plans to expand its capacity in the packaging and films business on account of those higher capacities being commissioned. This could result in a near-term oversupply situation, and the abnormally high margins of almost 20-21%, which was never seen before in the packaging and films business, they could come off. They typically do around 15.5 to on the upper end somewhere around 17 to 18%. So the 20% number was slightly higher this time around. So that should come off as well. The technical textile business, they continue to have a negative outlook because of the weakness in the automotive business. They provide the belts and all, belts and gears which are used in cars. So there they see continued weakness at least for the next foreseeable 2 quarters. But the chemical business, that is their mainstay, and their new launches as well as sustained demand from the pharma space, that is likely to boost growth going forward, and that is something that the street is liking, is why we are seeing the stock up almost 14%, nearly recovering almost 2/3 of the loss that we saw, 17% down in the last 1 month.
Okay, thanks a lot for that. So, well, 13.5%, and that's what SRF has done off late. Either due to good results or due to good performance, some of these specialty chemical companies are in news. Deepak Nitrite, for example, the other day, good results, SRF okay results, but the performance very strong. One stock, however, that's not been having a good run for the past few days now is Zee Entertainment. The stock's been falling for the last 7 days on a trot. Mishika Parak is here to take us through the valuations, the price performance, and what else that dealers might be saying as well. Mishika, that 11% stake to Invesco Oppenheimer doesn't seem to have impressed other investors at all.
Yes, Neeraj, that's absolutely right. Zee is down for the 7th consecutive trading session today. Since the deal was announced at a market price of 400 rupees, it has gone down by almost 25% to 311 rupees. Now let's have a look at what brokerages are saying on this. Axis Capital says that the stake sale was healthy, but the overhang remains, and Zee will have to complete the sale of other assets within the stiff deadline. They also expect the stock to remain sideways over the next few months. Nomura says that the promoter's stake sale eases pledging concerns to some extent, but the sale of remaining assets remain critical for investor confidence, and they believe that further re-rating will also depend on improvement in the working capital. Lastly, Credit Suisse thinks this was not the best possible deal, and the deal addresses only a part of the promoter debt problems.
Okay. Well, I guess those concerns quite warranted from a lot of brokerages, and maybe that's why that stock is under pressure. Mishika, thanks so much for putting that into perspective. Well, the deal, before the deal happened, the stock was above 400. On the day of the deal, the day the deal was announced, the stock was down 5%. It followed up with then another 4% cut, and then has been consistently falling, and currently at 312. Maybe off the lows of the day today, was down about 7% at a point of time, but still under pressure in the session. This is the intraday price of Zee, and as you can see, midway through trade was down about 7%, currently at about 312. Well, let's get in our experts on board. We'll talk about this fundamentally as well, but let's get in our experts to talk about what to do with the markets, and we'll start off with Zee because that's the stock in focus, and Rahul Randeria and Amar Singh are with us. Rahul, let me just quickly come to you firstly on Zee. How do the charts look? Would you go out and short, or would you do a contra long here?
Yeah, as you said, the stock has been beaten down significantly after the deal, which was announced a couple of days back. Now the stock has been into a deep oversold territory, and what today interesting has happened that we have not seen after initial weakness, we have not seen follow-up selling. So definitely we could see short covering coming in the coming days. Definitely a contrarian trade can be taken at current levels. One can accumulate in the range of 312 to maybe 303. with a stop loss below 288. I feel that the stock short covering can take the stock to the levels of 345 to 350 in the next 10 to 15 trading sessions. So it would be a swing call. Anybody who wants to take a risk in the deep or sold territory can take a call at current levels.
Okay, so that's the verdict on Z. What about the markets which are doing so well? Amar, yesterday not too many people would have thought of this, but we've bounced back quite remarkably. Are you using this bounce to lighten up positions? What's the index strategy for the afternoon?
Yeah, I would say that we had initiated buy calls in Nifty and Bank Nifty yesterday and this morning also, because overall what we witnessed was that there was this sharp recovery which happened yesterday, and today also if you look at on the charts, there was a bullish Japanese candlestick formation. So that really showed that there is a short-term bottom definitely has been made. However, for Nifty on the upside, 11,050 is a level, 11,050 is a level of resistance, immediate level of resistance for Nifty. And technically, so what could happen is that from there on, we could witness some profit booking. And if that level is taken out, then it could head higher towards 11,100 odd level. So I would say that seems that a bottom has been formed in the short term, so 10,780 to 10,800 levels. Whereas on the upside, 11,050, 11,100 is a level where one should look at booking profits, and if it does not sustain over that level, then we are likely to witness again selling pressure on those levels.
Okay. What about individual stocks then?
Yeah. Talking about the stocks, I would say I would start with first one is Asian Paints. Asian Paints is one stock which I would say definitely has bounced back significantly, and in spite of the market downturn, this stock is one which has really held the fort, and currently also it's trading above the 1550 mark, which was a earlier resistance zone, and it continues to be strong on the long-term chart. So this is one stock one can definitely look at. So at current levels at 1550, 1555, ideally one can look at buying the stock. With a stop loss of 1493 and a target of 1645 on the upside. And the second stock to look at is from the IT space, and that is Infosys. Infosys, what we witnessed is that Infosys continues to be strong on the long-term charts and the monthly charts. The weekly charts are also strong for the stock. On the daily charts, the stock has been, I would say, trading sideways, but it seems to have formed some strong support at lower levels. So Infosys is one stock one can look at, and also the depreciation, the rupee is definitely helping the stock. So around 770, 775 is a good level to buy, and with a stop loss of 757 and a target of 803 in the short term.
Okay. Those are some of Amar's strategies, and getting slightly defensive on those calls. Remember, we've been seeing how IT has been a standout in the recent correction that we've seen in those high beta names. But bringing in Dharmesh Kant of India Nivesh Securities, he's joining us on the show right now. Dharmesh, thanks very much for taking out the time. What have you made out of the U-turn that we've taken today? Obviously, this could be just a short-term relief that we could have been seeing after that steep correction from the record highs. But nonetheless, from a long-term perspective or a medium-term perspective, does the strategy change at all?
Yeah, good afternoon. See, this bounce back was long overdue, and I think tomorrow's RBI monetary policy has much to do with this. In fact, even if the global markets were down today and this bounce back was there in our market, I would not have been surprised. And I don't think it's too early to take even a medium-term view as of now, because earnings so far has been dismal. Even if you look at Nifty 50 or top 200 market cap stocks, their single-digit kind of earnings growth has been there, and the commentary has been equally bad. What is helping market now is maybe rupee depreciation is pushing up IT stocks, and some consumption names like paints have done particularly well. But not to forget, this quarter again, the numbers of paint will be difficult because replacement market may be having some demand, but other than that, there is no demand from either civil constructor, be it residential or commercial property, or automobile manufacturers. So both are seeing a slowdown. My own sense is that if one wants to do some cherry picking, the segment which is out there is pharma, which has come out with a good set of numbers, primarily on account of low base effect, and secondly, the price erosion at the top line seems to have stemmed as of now. And the second sector which one can look out is again IT. So these two are the sectors where you can do some nibbling, and if somebody is a brave heart, they can go ahead with PSU banks. So these are the three spaces when one can look at. My top picks from them are Avendus Pharma from the pharma space, looks pretty attractive to me. From the IT space, TCS is again betterly valued compared to that of Infosys. And from the PSU banking space, I think Canara Bank stands out as far as the numbers are concerned when compared to SBI, PNB or above. So there a lot of value is there. So these are the top three picks from these three different sectors.
Okay, by the way, just mark Pidilite and the numbers that came out when the bottom line numbers were above estimates, and I think the press release seems to suggest that the volume growth numbers for Pidilite are northwards of 6% or about 6%, and maybe that's what's led to this stock doing so well. 1315 and counting, some remarkable results there. Amidst slowdown, I think we've seen what some specific consumption names are able to do. One, they are able to tighten costs. Two, they are able to sustain the volume growth numbers meaningfully. Asian Paints, case in point, Pidilite, a case in point, and you would ask yourself that how is it that this is happening when construction activities slow down, etc. And the adhesives business of Astral was not all that great. Despite that, Pidilite has managed to do quite a wonderful job out here. Dharmesh, any thoughts here on Pidilite?
Yeah, see, I have an answer to that. When there is a slowdown and a lot of these, big brand companies are offering discounts in a direct or indirect way, so then you have a brand choice for whatever consumption. See, it's not the end of the consumption. Consumption is still happening. Growth has not been there. So in the limited market consumption which is happening, these brands which are the premier brands out there, so they are attracting the market share. So this we have seen even in the case of automobiles, like Escorts have gained market share from M&M. So things like that are happening, and I think this explains to my mind the growth. I mean 6%, 5% kind of a volume growth which is there, be it Asian Paints in the space or Pidilite. Other than that, the market per se has not expanded. There has not been 6 or 7% growth in the market. So I think credit should be given to these companies for getting their marketing strategies in place and to garner this share very effectively.
Okay, that is Pidilite for you. The stock's up about 3.5%, and not just Pidilite. We were talking about how the consumption names, and particularly FMCG stocks, have done in terms of their quarterly performance. And I think barring Dabur and Nestle, none of them have really shined in terms of their quarterly performance. Dabur today is up about 2%, Nestle is up about 1%. But these are the only two stocks within the FMCG pocket that have meaningfully done anything with regards to earnings. Dharmesh, what would you do with this pack? I mean, while obviously being a pack which is slightly expensive, but also being a pack where it's a little bit more capital preservation than destruction.
Yeah, you nailed it perfectly. It's more of a capital preservation, and with the type of correction which we have seen in most of the consumption names, I think now the risk reward ratio sits in favor of them. And not to forget, monsoons are back to normal levels, and we would be moving soon into the festive season, and Q2 and Q3 are the best quarters for them. So I think if from here, I mean, nibbling can be done in them. Just give market a few more days kind of a chance. I mean, 1 or 2 weeks, if you buy it 3% higher and the stock is about to move say 10 to 15%, there's no harm losing 3% on the way, because the type of scenario, global scenario we are sitting in, if we have a next leg of correction, it will be far, far sharper than what we have seen as of now. So I would like to be safe rather than being sorry, because you already have debt market and bonds and FDs in place to preserve your capital. So, but yeah, if the market stabilizes from here and some soothing news flows from the global markets is there, then all this consumption pack, be it Hindlever or ITC or Dabur, Nestle, all this will start seeing buying traction, because automobiles and the other frontliners are still a far way from getting buyers' interest or investors' interest as of now. Their numbers will continue to decline for some time for now.
Stay on, Dharmesh. Just wondering, I want to take off some of those along with the stock ideas from Rahul Randeria. Rahul, your stock recommendations, yes. Also, a word on Pidilite and the way it has bounced up today. Can there be some further upsides?
Yeah, if you look at Pidilite, it has been moving in an upward trend from the levels of 1180 odd levels, and currently it is just nearing its lifetime high. So definitely, slowly and gradually, the charts are getting stronger, and any correction should be used to buy from the current levels, maybe with a stop loss of 1270 on the downside. On the upside, I feel that stock has potential to test the levels of 1400 in short to medium term after the breakout, because the FMCG stocks are getting building up momentum from the current levels. And about my trading calls, I have two buy calls, positional buy calls. First is a buy in L&T. One can buy at current levels and on corrections to 1365. Upside positional target is 1467 and with a stop loss of 1348. My second buy call is in Maruti. One can accumulate or buy at current levels and on corrections to 5730. Upside positional target is 6180 with a stop loss of 5677 on the downside.
Okay, that's Maruti for you. Should pull up the rest of the pack to just see what an M&M has been doing, what a Tata Motors has been doing. The last few days we've been talking about how the pain just refuses to subside within the auto pocket, and we've been seeing that with the volume numbers as well. Also, we've got the America Class 8 truck figures month-on-month basis. Also, there's a dip of 24%. On a year-on-year basis, there's a dip of 81%. So that really doesn't augur too well, for the likes of an Ashok Leyland either. Stock's down about 1%. But Dharmesh, anything that you would want to probably look into from the auto space?
See, the auto space has the same story everywhere. Even globally, BMW sales are down, Audi sales are down. So Bharat Forge reported Class 8 truck, they are not having any traction order flows from there. And domestically, people were saying that June numbers, our quarterly numbers are supposed to be bad because that's already there in the auto numbers. But look at July, the sales are very sharply down. I don't think there would be a reversal in any of these numbers pretty soon. And auto industry itself is under a lot of a changeover kind of a scenario with electric vehicles focus out there. And it will be time because they already have a run of three and a half good years of run up has already been there, and people don't chase vehicles every day. So this was supposed to happen, the plateau was supposed to happen. The decline has been far sharper than what was been expected. I think it's still time to do some cherry picking. Next 2 quarters will equally be bad. The festive season, if you compare year on year, the numbers will be more pathetic than what you have seen the numbers as of now. So I would be completely avoiding the automobile space, at least for this calendar year.
Okay. Would you buy a Motherson Sumi sub 100?
Not at all. So because auto ancillary, the business itself will have a paradigm shift because with EVs and the focus out there, the entire piston suspension IC thing goes away and the new technology comes in. So but these all auto ancillary companies will have to adjust to that. And situation is really bad out there, Neeraj. If you speak to them or even at the the companies who are supplier to these auto ancillary companies, they are having more pain than auto ancillary themselves. So it's more of a cascading impact. And I don't think situations will improve soon. So some time to go.
Okay, Dharmesh, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. Appreciate your time.
Thank you so much.
That's the view from Dharmesh Kant of India Nivesh Securities. Not buying into some of the auto ancillaries. I must say, not all auto ancillaries business will go kaput if indeed EVs take center stage. I mean, a lot of these companies like Jamna Auto, for example, will continue to do well because they supply suspension related products which will be useful even in an electric vehicle. At least that's what some analysts told me. And maybe therefore watch out for some of the companies which will not get impacted. Battery makers, for example, will not necessarily get impacted negatively because batteries will be needed and they're already trying to make those things for the electric vehicles as well. So interesting mix of companies. Let's wait and watch. By the way, the markets are doing even better now. We're trading at the highest point of the day. Yes Bank, Indiabulls Housing, Bajaj Finance, all of them are just doing remarkably well. And HDFC at 2213 is packing a serious punch. So, yep, that's the heavyweight, which is doing rather well for itself. Before we continue any further with the equity market conversations, or rather sticking to that, but talking about corporate, Sheela Foam is a company stock in focus. It's acquired a Spain-based company called Interplasp, which makes foam that is used in bedding and furniture. To know more about the acquisition, Agam Vakil had a chat with the managing director, Rahul Gautam. Listen in.
The European Union is the largest foam market in the world as a single entity. Spain continues to be a low-cost manufacturing center, supplying to the entire Europe. So that's there. And above all, this company at the moment has only about 1% share of the entire European market. So there's still a huge headroom to grow. So we expect that this will. Plus, it has access, where it is located, besides the European Union, it has access to North Africa, which is just about 6 or 7 hours away from where this company is. And I also believe that with the recent spat between China and US, Spain will become a big supplier to the US. So keeping all that in mind, we decided to go ahead with that. Very familiar with the technology and the raw materials and the processes, so that's not an issue.
All right, so if you could just expand a little more on that one, because I'm reading about this particular acquisition being a stepping stone in Europe, and secondly, of course, there are also economies of scale, and I think you've briefly alluded to the fact that you have some advantages coming in from Morocco. If you could just tell us a little more about the benefits of cross-fertilization and the various techniques in terms of portfolios that you will be using and that may come into aid for Sheela Foam.
So the technology that is used there for manufacturing foam is a very unique one. It's called as variable pressure foaming. We use that same technology in Australia, and we do that in India. And at least for the Indian and the Australian subcontinent, we have exclusive rights to that. So this process does allow us to make foam which can actually be compressed and transported. The cross learnings, all the technical foams which have been developed in India are not being done currently by that company in Spain. And they do have a lot of shoe manufacturing and lingerie manufacturing around where they are based, so that technology will go through. What we can learn from them is these compressed foams, bed in a box, etc. So I expect that to happen in the next few months.
Right. Mr. Gautam, the press release does suggest that the revenues from this particular company, that's Interplasp, have been growing. But my question was to do with the operating margins or operational profitability in general. How is that? And do you think that at least in the near term that could be bearing down on Sheela Foam's consolidated numbers? We just want a better idea of how the operating part pans out for Sheela Foam on a consolidated basis.
So whatever are coming together would improve both the numbers. I'm leaving that aside. But currently, Interplasp, for whatever it closed in 2018, it has been growing. The EBITDA levels are ahead of Sheela Foam, so it's going to be, on a consolidated basis, going to be accretive. Second, I may not be able to give you the exact numbers, but the first 6 months of 2019 has been better than 2018, and therefore I think it's a good thing for Sheela Foam, on a consolidated basis.
Okay, so then let's shift focus to the demand environment in India. Have we noticed anything of a pickup? Because there certainly is a little bit of a slowdown when it comes to discretionary spending. What are your observations now as compared to perhaps what you may have seen in about the last 3 or 4 months? Has anything changed, or is it still more or less the same?
No, it has changed. I think it's being experienced by everybody, at least in our segment. And as you talked about the discretionary spending, so if GDP comes down from a 7 to 5%, actually the impact on us is not just 2%, but the impact is far more, because our products are on discretionary spending. So we've been experiencing it. I believe, or I hope, that this is just a little pause that the economy is taking, and the corrective steps, some have been moved by the government, some more should be happening. I I think that the big vision that the government has taken of $5 trillion economy in 5 years, there should be many steps from their side to really move in that direction, and our industry should benefit from those steps. So.
All right, Titan numbers flashing on your screens. You've got the profit numbers. 371 crores is what they've clocked in. That has come in lower than street expectations. The Bloomberg poll suggested a number of 416 odd crores. They've clocked in about 371 odd crores. So at least on the profit side, looks like there is a slight bit of a miss. There is another income component as well, about 55 odd crores that has come in, but that's what we've got as of now, just the bottom line number, and we're just waiting to see what the overall number is. I think we've got 4,885 crores is the sales number.
That's also lower.
That's also lower.
Marginally, yeah.
Marginally. I think 5,083 odd crores was what the expectation was, and they've come in at 4,885.
So, Devina, I may be wrong here, but I think the EBITDA numbers, standalone EBITDA numbers, are in line with estimates. And if those EBITDA numbers are what they are on a slightly lower top line base, then the margins would have not remained flat, but maybe expanded a little bit. I might be speaking slightly ahead of time, but we'll wait for those numbers to come in and the calculations to happen. But I guess that the operational numbers might be slightly better than what the street was working with. Now, let's wait for those numbers to come in. Thus far, we just have the net profit numbers, but as I look at the sheet and look at the agency flashes, I think it is saying that the EBITDA numbers, standalone EBITDA number, is just about a couple of crores here and there from what was anticipated. So, well, let's wait and watch and see what happens. But this seems to be a slight miss on the bottom line. On the top line, maybe a marginal miss at that.
It's
operationally, not a bad number.
It's quarter on quarter also very flat. And year on year, it's a slight bit of a miss with regards to the sales. Also, remember, a very big range in terms of the volumes, jewelry growth segment. So we'll have to wait and watch as to what that came out to be, because there was a range from 13% to 20% growth in the jewelry segment, and that across the board, various brokerages like Motilal Oswal, Edelweiss, IDFC. So you'll have to wait and watch as to what that came out with. And remember, this time around could have seen the impact of lower demand on the back of those high gold prices as well. Though the stock is holding steady, so not too much of damage on the stock price yet. 1,060 on Titan right now at 23 odd points higher. Dharmesh?
I think that I've just thanked Dharmesh, but that notwithstanding, the key question, and we'll ask Avinash Gorakhshekhar about this as well. The key question is that, is this largely in line with what they had spoken about that when they given their Q1 updates for most of the businesses, or there is a stark deviation? The 20% growth in the watches business doesn't seem to be all that bad. Now, before we get the fundamental view going, maybe there's a trade out here. Amar Singh, quick thought out here. Would you trade a Titan? It's showing that bit of a spike. Would you go out and risk a trade?
Yeah, I would say that looking at Titan, if it sustains above 1,070, then trade is likely, because then it could rally all the way towards 1,100 levels. But I would wait for the level of 1,070 to be breached.
And view would be similar for you, Rahul?
Yeah, I'll be the way the stock is panning out, and already what we have seen, the gold is shooting up, and the stock is correcting, and it's corrected significantly. So I would be a buyer at current levels, and maybe in short to medium term, the stock can test the levels of maybe 1,120. So one can accumulate. Stock might cool off a little bit, so one can buy at current levels and on corrections to 1,040. Stop loss should be placed below 1,010.
I think in their quarterly update, the Q1 update that they gave to the exchanges last month, they'd said that jewelry segment estimates about 13% growth in sales against the FY20 guidance of 22%. And this despite the sales during Akshaya Tritiya being robust. The other one was their watches division. There was a strong revenue growth of about 19 to 20% out there, which is reflecting in the numbers as well. 10 Titan World stores added, a lot of other inputs that they're already given out in the update. Profit margins, however, they had said, are expected to remain flat or probably slightly lower overall due to higher expenses on salaries and higher activations and dealer meet related expenses. So we'll have to wait and watch to see what that margin figure has turned out to be. This was all from what they actually did with with regards to their Q1 update?
Yeah, Devina, I think just the base calculation will be slightly off here, but I think the base calculation suggests that the margins are also very, very flat. So there's nothing dramatically bad about Titan's numbers. The stock is up about 2.5. Remember, it's also a stock that approached these earnings not too well. If you pull up the 1 month chart or the 7-day chart, you will see that the stock had corrected a little bit in the run up to these numbers. And because these numbers are not throwing anything untoward, I reckon that is probably one reason that the stock is doing what it is doing. But Agam Vakili is waiting by to give us his synopsis. Agam, what stood out for you?
Neeraj, firstly, we have to understand that when it comes to the estimates, some of the estimates from the analysts were a little too aggressive, and despite the fact that Titan had actually suggested that they are looking at 13% revenues in jewelry sales, some of the analysts on the street had actually said that they're likely to move in and give out growth of around 16 to 17%. That's possibly the reason why optically it is looking like a little bit of a miss. But if you keep these estimates aside, well, it's largely in line with what the management had already indicated. In fact, according to some of the other numbers that we are looking at, the watches segment has seen a 20% growth as against our expectations of just about 11 to 12%. So that's a positive. Coming down to jewelry, well, the company does get over 80% of its revenues from the jewelry segment, and the management had said 13% growth, and that's exactly what they've got. So keeping all these factors into mind, if you actually look, margins again at 11.4% are very much in line with expectations, considering the expectations of around 11.5%. And we have seen a little bit of a dip in profits, but that's largely on account of one-offs and taxation. If you keep that aside, the numbers are largely in line. We also have to remember that Titan has already dipped and factored into quite an extent the numbers that we are looking at right now. So all in all, a steady set of numbers and largely in line with expectations, if not a notch below expectations.
All right, Agam, thanks very much for that. That's Titan Industries for you. The stock is pretty stable at this point. Not too much in terms of price action fluctuations, just that big one uptick that we saw post the initial few flashes. But this is nothing new other than what the management had already spoken about in their Q1 updates. So nothing incrementally big has come out with the numbers. Like Agam pointed out, pretty much in tow with the commentary put out by the management. And Titan, as we said, the run-up ahead of the numbers had not been all that great. It had been slightly more subdued compared to some of its peers. So, probably just, reversal of that in today's session. 1065. Avinash Gorakshekar of Joindre Capital Services also joining us right now. Avinash, you want to quickly give us a comment on Titan?
No, I think numbers which have come out, Devina, are more or less in line with expectation, especially on the jewelry business. The watch business has done quite well. I think a strong 20% kind of growth. The eyewear business has also shown a decent growth. I would believe, now going forward, what kind of margin outlook comes for the jewelry business and the volume expectation in the coming quarters in the evening conference call is going to be very critical. I think once the management gives a clear hint as what kind of growth commentary we could expect from the jewelry business, considering the fact that luxury products have been hit, demand consumption especially for these items, it would be interesting to know how the management is looking forward as far as the demand outlook goes for the next second and third quarter. So I think overall a decent set of numbers. Not markets were expecting this kind of disappointment, but overall I think the growth outlook commentary now from the management would decide the future trend for the stock.
Okay, would you buy into it though?
We have a hold on the stock, Devina. We have been telling our clients to actually look for some further correction to buy into the stock. Our sense is that Titan definitely has a strong product portfolio, but obviously I think if demand doesn't sustain at these levels and shows some weakness, then we have been telling our clients to actually buy this as a long-term kind of portfolio stock. Although in the near term, we could see maybe some earnings pressure coming in.
Okay. Just want to take a look at some of the other index movers right now. Indiabulls Housing is up 7%, so 510. I think all the Indiabulls Group stocks are doing okay for themselves this afternoon. L&T recovers a bit, so about 3.5% higher, inching its way back towards 1400. Then you've got Tech Mahindra and Hindalco, which are also trading up in today's session by 3% Indiabulls Housing Finance also waiting to see what the quarterly performance has been for the counter. But Amar Singh, what would you do ahead of numbers? 512 for Indiabulls?
Yeah, looking at Indiabulls, I would say that one needs to be slightly cautious ahead of the numbers, because if we look at it, the stock has managed to bounce back because yesterday's low was 457 and currently it's around 512, but I would say that I would rather stay away from the stock.
Okay, we'll watch out for all of these names and more. By the way, as things stand, we've come off a little bit from the highs of the day. The Nifty Bank about 374 odd points higher, but in the green. Though it would have been relatively easier than yesterday to find out Fab 4 stocks. Let's find out what's made Yash Upadhyay's list of those Fab 4 stocks of the day. Yash, good afternoon.
Good afternoon, Neeraj. I'll start first with Pidilite, and they came out with an extremely good set of numbers, which were ahead of the street expectation. Their top line grew by about 10% on a year-on-year basis, bottom line growth of 23%. Margins have come in at 22% versus expectation of 21%, along with a 6% volume growth in the consumer and bazaar segment. So all in all, extremely good set of numbers from Pidilite, and the stock's up about 3.5%. L&T is another name to watch out for. L&T Infotech, where Morgan Stanley has come out with a report initiating coverage on it. Now they have initiated with an overweight and a target price of 1,780 rupees. They expect the company's core business growth to outpace that of its peers, and with valuations looking attractive, it is their top pick in the mid-cap IT space. So watch out for L&T Infotech as well. Torrent Power has been buzzing in trade, up 4%. We've seen high open interest build up in the counter of more than more than 15%, which indicates that traders are taking fresh long positions. And along with that, we've seen some of the power names too bounce back in trade today. But oil marketing companies are the other pack to watch out for. Like Oil India, there's BPCL as well, which is up 2%, and this is down to the fact that crude has cooled down more than 3% overnight, which is aiding most of the OMCs and the other crude sensitives. Back to you.
All right, Yash, thanks very much for that. That is the Fab 4 stocks of the day. Before I move on, I just want to quickly, get in a word from Rahul. I think, Rahul, you wanted to talk about the index right now?
Yeah, definitely, Devina. Index has cooled off 70 points from the day's high. So this is the opportunity to buy those who have a positional call, positional view. And we have a target of 11,111 for short to medium term, maybe for next 1 or 2 days. Definitely one can buy at current levels, even and on corrections to 10,930. One should place a stop loss below 10,870 with a positional target of 11,111.
All right, use this dip to go long on the index. 10,954 is where the index is currently trading at. Moving on, in the latest episode of Trade War, US has called China a currency manipulator. But Taimur Baig of DBS Bank believes the decision to devalue Chinese yuan may have been driven by internal economics than trade war. In this chat with Bloomberg, he also spoke about the factors that may urge RBI's Monetary Policy Committee to cut rates tomorrow. Listen in.
We need to sort of isolate the developments of the last 48 hours from the broader macro narrative of both China and Hong Kong economy slowing and need for easier policy and additional liquidity. So even if the developments of the last 72 hours or so did not take place, I think we would have expected a gradual depreciation of the RMB, more liquidity injections in both onshore China and in Hong Kong around all the other developments that are taking place. So it is coincidental that some of these events are taking place at a time when U.S. is threatening additional tariffs. But I don't think the cause and effect is that clear cut. A case for further depreciation of the RMB, I think, has been made for a while around the Chinese economy's weakness.
What is the likelihood, or is there a possibility in your view, that they come out and start selling US bonds? I know this could be damaging to them as well, but it's the so-called nuclear option. They don't have to go the whole way, but selling off some of the $3 trillion that they own.
Right. I think the nuclear option is actually what has been sort of talked about in the last 24 hours, which is not buying U.S. agriculture products. That hurts Donald Trump's base substantially in the Midwestern districts. It may backfire too. Maybe it may embolden and unify opposition against China in the U.S., but I think that is has more immediate pain for U.S. than the idea of selling treasuries at a time when curves are inverted and treasury yields are heading toward an all-time low. And hence, if China were not to roll over some of their holdings of U.S. Treasury, I don't think it's that big a deal. The signaling is substantial, of course, that this is one more tool in the trade war and currency war that China is willing to deploy, which could also be seen on the other side, that U.S. Treasury might be selling U.S. dollars in the coming months if this saga continues to exacerbate.
With rate cuts expected, have a look at this, out of New Zealand and India and also the Philippines. Some interesting comments out of the central bank governor yesterday, Mr. Jokno there.
Taimur, who is the most needy of a cut here amongst those five?
India would be top of my list. I mean, there are all sorts of global things happening, which is making central bankers dovish, but India has massive domestic issues to deal with as well. So I think that RBI, not only will cut this week, but probably has, much more to do both in terms of liquidity injection and rate cuts in the latter part of this year, independent of what's happening with the global monetary policy outlook.
Well, I think that's the key word. Independent of what's happening with the global policy, India will go and cut rates. And therefore, the quantum of cut and the nature of the commentary tomorrow will be very, very important. Remember, 11 a.m. onwards tomorrow, we will be here telling you, or maybe 10:30 onwards, we'll be here telling you what the RBI is doing and what the rate implications would be or from the policy tomorrow. Okay, now some companies really, let's pull up DHFL and let's see what's happening there. That stock is up 31%. Now, usually when it comes to DHFL, we are used to seeing the cuts down, which are large cuts on the downside. It's on up 31%. Trees don't grow to the skies, Avinash, but, well, it's a big announcement that they've made, and it's certainly showing in the way.
They're saying that no creditors will have to take haircuts, and they're also giving you a forward-looking projection saying that they're going to look at growth by tapping in those, NHB lines and bank credit lines.
Yeah, but which is my question. I mean, one, does it give you the confidence that not normalcy, but some business could resume, because hitherto DHFL has only been not disbursing but protecting.
Exactly.
And would you go out and therefore risk buying this stock?
I think Neeraj, clearly, the management has pointed out, but I think actions need to be actually reflected in numbers. I would believe that from a investment point of view, it would be better to actually take a cautious call here, because in the last 2 to 3 quarters, what the management has been doing is actually protect capital, repay their lenders, and growth has taken a backseat. So I think these kind of statements coming in from the management clearly hint that probably they have now everything ready, but the markets would obviously like to wait for some more clarity and some more concrete numbers. Only then I think one could take a conscious call on whether one could definitely go positive on the stock. As of now, I think it does not inspire confidence to actually buy out, even despite the fact that the stock has actually become 1/4 from what it was earlier.
It's true, because you're in an environment where, most of them are actually seeing cost of funds rise, which are denting their margins. And so is also going to be the case, because it's a risk, getting exposed to demand housing finance. And while they may be saying that they will look at bank borrowings and getting, lines from NHB, but it's an uphill task for them.
It is, and therefore, for anybody who doesn't quite know what this book is going to do, it's a punt.
Yeah.
It's not pure play investment unless you're willing to take that risk, and that's the nature of your investing, that you go out and try a certain portion of your portfolio into a risky name and try and do that. So people do that with Yes Bank all the time the last few days. Could DHFL give you that possibility? I don't know, but well, certainly doing well. The question is there a trade here too? Because what may not be good for investment did not necessarily be same from a trade perspective. And Amar Singh, that's my question. Would you go out and, even a contrast, would you go out and sell a DHFL at these levels?
I wouldn't go and sell DHFL because if you look at the weekly charts have been completely flat for the last few weeks, and on the daily chart the stock has moved up and it has breached a crucial resistance zone earlier, somewhere around 52-53. That was a resistance zone, but again on the upside the stock has got some strong resistance coming at around 63 odd levels or so. So I would rather stay away from the stock, but if I were having positions, then somewhere around 60-62 would be a level to book profits, because above 63 the stock will meet with very strong resistance.
This probably would have been a good trade at the start of the show.
Yeah, or even when the announcement came in, right? Went up 9% when the announcement happened, and now at 32%. So just quite remarkable what DHFL is doing in the session. It's not alone, by the way. There are some other stocks, not in the same vein, but some other stocks which have shot up. Persistent Systems, right up there, 534, a big spike in the last 10 minutes. Balrampur Chini, a spike in the last 10 minutes. Symphony, very good numbers, a spike in the last 10 minutes. And SRF is up 16%. We keep on talking about specialty chemical stocks with Avinash Gorakhshekar. This one is no different. SRF, the numbers didn't seem special, Avinash. Maybe a lot of shorts in the system and those are getting covered, but a 16% move is quite stunning.
No, I think markets were not expecting probably this kind of performance, but a 16% move, Neeraj, is definitely not something which is purely to do with the numbers which have been presented in the first quarter. Our sense is that the stock could possibly see a little bit of correction maybe in the coming days. I think probably a 15-16% move for a large FNO stock like SRF is purely largely a part of short covering and some sort of speculative buying. Fundamentals apart, I think I would believe that only at lower levels, Neeraj, this could be a good investment bet. I think at current odd levels, I think the markets have already given it a very strong kind of re-rating based on the Q1 set of numbers, and which I feel probably some more profit booking or some selling could possibly happen in the next 3 to 4 days, and probably that would be a good time to accumulate.
Okay. All right, that's 3,000 on SRF, and I'll try and get in Rahul or Amar's view on the trading prospects for SRF. But in the meantime, let's take a look at what dealing rooms are recommending this afternoon. Yatin Mota is joining us with his channel checks. Yatin, good afternoon.
Afternoon, Devina. UPL is the first stock that we're talking about. A lot of short covering seen. From the day's low, we have seen a good bounce back coming in for UPL, 2% up for that one now. Almost 40 lakh shares traded here. Dealers are indicating that the short covering could continue for a day or two. Yes Bank, this is one stock which is quite active in trade today, 6% up for that one, almost at the day's high. Dealers do indicate a buy today, sell tomorrow kind of a strategy, given the fact that they are expecting some gap up opening for the trade tomorrow and the momentum to really continue as far as Yes Bank is concerned. And finally, Wipro is one stock which is quite weak in the IT pack. Dealers on the basis of FNO trends are again talking about weakness that could emerge in select IT stocks.
We're hearing some murmurs on HDFC Life, Yatin. What are you picking up?
So Devina, if you remember a few weeks back on First Word, we had spoken about HDFC Life as to how it can be included in the MSCI India index. And on the back of that rejig, which is getting announced tomorrow post the market hours in the US timings, the morning timings, the inclusion related buying is happening in the open market. Motilal Oswal does expect a $200 million plus kind of a buying which could emerge because of the inclusion of MSCI for HDFC Life. So ahead of that, a lot of activity seen in these MSCI stocks, including the likes of HDFC Life.
5% higher, that's quite stunning. Yatin, thanks so much for putting that into perspective. Rahul Randeria, HDFC Life didn't crack with the markets, is moving up when the markets are doing well. It's a sign of a stock which is seeing substantial buying interest and not seeing enough selling interest. Would you go out and initiate a fresh long?
Yeah, as we look at the price of the stock since last couple of months, the stock has been making higher tops, higher bottoms, and every dips has been bought supported with strong volumes. So definitely today also there is a sign that strong volumes and price action shows that the momentum is building up in the stock. I would recommend to buy at current levels and maybe on the cool of around say 500. Upside positional target would be around 535. One should place the stop loss below 495.
Okay. Amar Singh, quickly a view on SRF if you haven't already spoken about it.
Yeah, looking at SRF, I would say SRF continues to be extremely strong on the charts. So if you look at the long-term charts on the monthly charts, the momentum is extremely strong for SRF, and we did witness it in a consolidation zone from almost the entire July month. From the start, from the second week of July, it's been in a consistent sideways movement, and it did find support around 2570 odd levels. So technically, yes, the stock continues to be extremely strong. However, if you look at the stock has an upward potential towards 3050, 3100 levels, where the key resistance would be, because that's where the previous top was for this particular stock at 3,086. But the trend remains extremely strong for SRF in the long term.
All right, after yesterday's slam dunk, I think Gati recovers some lost ground. I think about 10% higher this afternoon. Then you've got the likes of a Hathway, which is up 15%. Sri Renuka is up about 6.5%. Praj Industries is up about 7.5%. I want to also, quickly take a look at what Dish TV is doing, because after that initial euphoria around the stock, and from where Z started to move up, went above 400. Even Dish TV had a similar ride up. Now is back down to about 23. So that's going to be, some amount of drain on, the wealth of investors within the company. What do you do with Dish TV now, Avinash?
No, I think looking at the kind of business model, Devina, I would believe that fundamentally and operationally, it's going to take a long time for the business to actually recover. And ARPUs definitely are under pressure, and I would not be surprised that given the fact that Jio now wants to increasingly increase its presence in the broadband business, it would obviously eat into the margins of players like DTH players like Dish TV. So I would believe that it's still too early to take a call as of now. I would preferably avoid it, considering the fact that operationally cash flow continues to be weak. The debt position also seems to be pretty high. So despite the fact that they have been adding a lot of subscriber additions, I think overall cash flow generation continues to be weak.
Okay. Watch out for Dish, yes, and as 10 minutes left for trade, and while the markets have come off quite a bit really from the highs of the day, there are enough and more individual names which are doing well. We haven't quite as yet spoken about Bajaj Finance as a trading ploy at all today. Again, an example of a stock which is seeing buying when the markets are moving up, not seeing selling when the markets are coming down, and 3,300, it's 300 rupees higher. It's a 10% up move for Bajaj Finance from the lows of the result day, which is quite interesting. Rahul Randeria, our top closing strategy first, and then we'll come to a view on Bajaj Finance as well.
Yeah, I have a buy call in PVR. The stock has been beaten down significantly last couple of days, and it has formed an engulfing bullish pattern supported with strong volumes. So I see some sort of technical pullback or a short covering from the current levels one can accumulate, which is 1461 with a stop loss of 1425. Upside, I feel the stock has potential to test the levels of maybe 1530, 1540 odd levels. So one can buy PVR at for short to medium term. Now, if we talk about Bajaj Finance, the stock has formed a flag pattern just above its 50-day moving average, and the stock is on a verge of a breakout. The most interesting thing has happened in the last couple of days. The stock has not drifted lower significantly, even when the markets have seen a severe sell-off. So definitely there is a strong undertone in the stock. One can buy at current levels. Upside positional target would be around 3,500, and one should place a stop loss just below maybe 3,151.
Okay, watch out for this one as well. Amar Singh, your top closing strategy?
I would say that one can look at HDFC Life because what we are seeing in this particular stock is that on the weekly charts and the long-term charts, the stock continues to be extremely strong and positive. However, the last few days the stock was trading sideways, forming a base, and today has been a sharp move for the stock. So any pullback in the stock towards 500 odd levels, that can be a buying opportunity with a stop loss below 480 and a target of 535 on the upside.
535 on the upside. Let's watch out for that. By the way, watch out for L&T. Maybe the technical trigger out there. There's some news flash on one of the wires that the Suti stake sale of about 1,000 odd crores might happen, and that's brought L&T down. But that would more be technical in nature, not necessarily something that will stay with as an overhang on the stock for long. Once that is done, if it is done, we're out of the way for sure. Reliance Industries is down about 1.5%, and that's that thing that is keeping a bit of a lid on the stock. Look at that sharp fall there. Rahul Randeria, quick thoughts here. RIL?
Yeah, definitely. Reliance has been on a weaker side, and it has been forming head and shoulder from the levels of 1330, and stock has drifted significantly lower. Initial support is coming around 1100, so I would be looking out for that particular target which we are having earlier. That would be the area where there is a multiple support zone from where we could see a technical pullback. So at 1100, I would be a buyer in Reliance. for a target of maybe 1210. But definitely I will be buying only when it fills a gap around 1100 with a stop loss below 1070 on the downside.
Okay. Vodafone Idea is 6.5% down, 5.6 rupees for Vodafone Idea. In the morning, we had a chat with the telecom expert who suggests that it would still be negative on Vodafone. That stock has only drifted lower, so keep that at the back of your mind. Not all falling knives should be bought at every level. Just remember that. Avinash, there is 2 or 3 names which are doing well in the session today. We've discussed SRF and Diwan Housing. One of them is Kolte Patil, the other one is Aditya Birla Fashion. Both of them are northwards of 6% higher. Do you track either of them fundamentally?
I think Kolte Patil definitely, I think in terms of, overall, I think their positioning in the Pune market and the Mumbai market has been doing pretty well. In fact, they are not highly leveraged, and more importantly, Kolte Patil should benefit significantly in FY20 as some of their Mumbai properties actually get commercialized. A lot of work has been done by them in the Mumbai market. So I think apart from the fact that they, are a dominant player in the Pune market, especially in the premium categories, the Mumbai market is definitely, Neeraj, going to give them a key amount of earnings triggers in the coming years, and I think the kind of properties they've targeted in the residential space should give them a decent kind of EBITDA push and an overall profit improvement. So I think even at the current odd levels, if somebody were to look at a mid-cap real estate name, I think this is a decent mix of a kind of a urban market mix, and I think the Mumbai market would obviously be beneficial for them over the next 12 to 15 months.
Okay, Avinash, we'll leave it at that. Thanks much for taking the time out and being with us today and giving us your thoughts. That's Avinash Goroshekar with his thoughts. As we wrap up trade, Indiabulls Housing Finance ahead of the numbers is up 7%. Purely from a charts perspective, with the results might throw up something untoward and which you don't know what will happen. But Amar, if you just look at the charts, and if you were long on Indiabulls Housing Finance, or I'll give you another stock as well, Yes Bank. If you are long on either of these two names, would you carry home the long positions?
Yeah, looking at Indiabulls, I would say that I would rather book profits in Indiabulls because overall the trend remaining negative for the stock. But yes, it is at very crucial support zone. So that's one positive for Indiabulls Finance. And looking at Yes Bank, if we look at Yes Bank in particular, what we are seeing is that this stock is still forming a bottom because it has got very strong support coming around 80 odd levels or so. So there is a possibility that that level will be held, and if it sustains above 86.50 levels, then the stock can rally towards 90-92 levels.
Okay, just quickly, Rahul, Axis Bank.
Yeah, the stock has formed a morning star pattern on the daily charts after a deep oversold territory. So definitely we can see a rally coming in the stock in the coming days. One can buy at 678 with a stop loss below 660. Upside, stock can test the levels of 710 in maybe a couple of days.
Okay, Jaiman, stay on. Let's start wrapping up the markets and then we'll get in final thoughts from our technical experts. But off the highs of the day, but in the green nevertheless, and this is, well, better than what most of Asia did. Maybe in line with what some of the European markets are doing, but banks are helping the cause and Reliance is not helping the cause. About 28,000 if it means anything, but about 0.5% a piece for the large caps. And I guess the mid caps and the small caps too having a good run today. The market breadth should be very different than what we've seen it for the last few days. Let's look at the large cap performance first, and then Devina will bring you up to speed with what's happening at the broader end of the spectrum. Indiabulls Housing 7.5%, Yes Bank 5.5%. There's strength in Tech Mahindra about 4%. There's strength in Aisha today about 3.5%. Bajaj Finance is that big mover, didn't correct at all with the corrections and now up about 3.5%. Hero MotoCorp, Bharti, Hindalco, Adani Ports, all of these are doing rather well for themselves. What's not doing well? Z, about 6% lower. Reliance, about 1.5%. TCS and Power Grid, and then Britannia down about 1%. Also watch out for Tata Motors and Bajaj Auto. Both of them are correcting a little bit in the trade, but the day belongs to the gainers, and a lot of financial names standing right out there in the large cap arena. On the mid caps, Devina, even stronger, couple of percentage points, quite a stark move upwards.
Yeah, considering that, when the markets are down, these are the first stocks to take the brunt of it. So today's session has been particularly kind for the broader market space, and individual stocks which have done well have been backed by some amount of news and just the fact that that of late they've been sold out, so there's some bit of covering that's coming. So first off, starting off with the Diwan Housing Finance, news is positive. They're talking about, getting a new resolution where creditors do not have to take any haircuts, looking at beginning their retail lending, tapping into bank lines. All of that commentary has pretty much kept the stock active in today's session, and specifically towards the last half an hour of trade, where it moved up about 30%. SRF on the back of good enough numbers met street expectations, but the stock had not done much up until the results, and therefore some amount of short covering pushing up the stock 15%. Hathway is the other one, along with Kolte Patil, that too reported its numbers, and the stock is up about closer to 9%. Gati, after yesterday's big sell-off, see some bit of a pullback in today's session. AB Fashion, then you've got the entire sugar pocket slightly more active in trade today, so Berhampur Chini, Bajaj Hindustan, Praj Industries, all of them shutting shop with gains of more than 5%. HDFC Life is the other one. Like Yatin highlighted, there are some murmurs that this one may actually be included in the MSCI index reject. Come tomorrow post-market hours. India Board's Real Estate, Indian Bank are some of the other names that were active in trade today. Amongst the losers, National Fertilizers sees a dip. Vodafone Idea continues to grind under pressure in today's session too. I think by close it's around 5.5 odd rupees, 5.6, down 6%. Parag Milk Foods, LIC Housing, so housing finance companies, some of them not doing well. Indiabulls Housing Finance being a different case in point, ahead of numbers. So LIC Housing Finance, Repco Home Finance, these are a few names there in that pocket that didn't do a whole lot much. 1% beverages down, Petronet LNG down in today's session. So these were some of the losers in trade today. But probably a close we could have hoped for.
Yeah, well, it's great to have some bit of green on the screen, Devina, because we haven't seen this for a really long time now. The last few days hasn't been particularly great. Bring up India VIX firstly, and we'll probably see that coming off a little bit. We can get some chart as well. It's essentially marginally flat. But India VIX the last 2 days have been such big spikes that doesn't seem all that bad in the session today.
All right, let's take a look at the contributors then, and that's the India VIX for you. In the last half an hour trade, I think it spiked up. Contributors then, banks did well. Reliance, the opposite force there was Reliance Industries, 17 odd points under. But ICICI Bank did well for itself. L&T too managed to muster some steam out there.
Yeah, and the market rate would be positive. We'll be waiting for this now for a few days, but for the first time in the last so many days that we've had positive market bread. So a good bounce. So you're talking in the morning about this likely not to happen because the world was looking negative, but the midpoint rate fixed by China clearly playing wonders. So, well, a contrasting move in the session today. And the volume should come up on your screen. Wonder if it's a high volume day. Well, yes,
Cash
it
market,
is.
yeah. F&O also probably slightly above average, but I think the cash market is a bigger give.
Yeah, and it'll be interesting to see what the FI number is like, because the last few days has been a month. I mean, the 1 week we saw nearly $1 billion, and then it was accompanied by 2,000 crores in Monday's session. Let's see what today's number throws up.
All right, let's get in those closing comments then from our technical experts. Amar Singh, let's start off with you. What's that one crucial thing you'll be watching out for in trade tomorrow?
Yeah, I would say that for Nifty, the lows that were made, 10,780, that 10,780, 800 levels, that's a crucial support zone. Whereas on the upside, the bounce back towards 11,050, 11,100, that's a crucial resistance zone where we could witness some profit booking and some shorting opportunities being created. So that's a level I'll definitely watch out for tomorrow.
Rahul, what about you?
Yeah, definitely. Looking at that today's close and daily candle, we have seen an engulfing bullish pattern on both the indices. So definitely we can see a momentum picking up in the coming days. Short-term positional target in the Nifty we are having at 11,111. So one can buy at current levels and on corrections in Nifty. As well as in Bank Nifty, we have a positional short to medium term target of 28,500. So maybe at current levels and on correction one can accumulate Bank Nifty also.
All right, gentlemen, we'll leave it at that. Thank you so very much for joining us this afternoon, Amar as well as Rahul. And on that note, we come to the end of Countdown. Thanks a lot for watching from Neeraj, myself and the entire team that's put this show together. Market Wrap comes up next.